Hi, this is Nick Hodge with Wall Street's Underground Profits. I'm sitting down once again with the chairman of GoldMining Inc., Amir Adnani, and it hasn't been that long since you and I caught up, Amir, but a couple of things. One, the gold space is heating up rapidly, as evidenced by gold touching an 8-year high last week. And also last week, while I was out, you had what I would call transformational news. You know, the last time we talked about the global resource that you had and how it should be worth so much more than was reflected in the current company valuation, and potential ways that could be that value could be unlocked either through a sale of one of your assets or other avenues. And here we are with basically just that. You've announced the creation of a gold royalty company. And like I said, I was out, so even I'm not up to speed. Why don't you tell us exactly what the press release means and what you're doing?
Hey, thanks, Nick. And really, what it means is that gold mining, by creating Gold Royalty Corp, which currently is a wholly owned entity of gold mining, we're taking the first steps here in positioning our portfolio for increased visibility to investors of royalty streaming companies, which are trading at substantial premiums in the marketplace compared to development or mining companies. And we've carved out 14 different royalties here, net smelter return royalties ranging from 0.5% to 2% on each of our projects. 11 of those 14 projects are associated with advanced stage resource and development projects, which make up our 11.4 million ounces of gold in measured and indicated resources and 13.8 million ounces of inferred resources. It's the largest resource portfolio of any pre-production company. And for investors in gold mining today, now you're getting exposure to the optionality of Gold Royalty Corp, and you're getting in on the ground floor. It's exciting because the royalty space for gold, it has two things going for it. One is you have these premium valuations for royalty companies. But the second is that it's become a very competitive space. Lots of royalty companies are being formed on a weekly basis, it seems. But many of them have to compete in a difficult environment. You got to have a lot of capital. You got to have a lot of ability to come in and to put together 14 royalties the way we were able to create from our own royalties. This is only really possible because we've spent the last decade assembling this portfolio. And after a decade of doing this, this seems like the right time to extract and set up this additional non-dilutive layer of value for our existing shareholders.
Well, it seems like the right time to do it, and the market clearly likes it with a response that has been evidenced in the share price so far. So a couple of things, I guess, just from my chair here is it seems like just last month I raised the buy under target to 165 for members of this publication, $1.65 Canadian, which the stock has now blown through to over $2 today as it's trading on Monday. And another thing I would say is that the stock is still not even back to where it was in 2016 when sort of this, I would say this gold bull market started, but was sort of a false start, if you will. And now we're coming into a real cycle. And not only have you added projects, but you've now added this other, we'll call it a layer, or this other piece to further unlock the value. And clearly analysts see it because you've got share price targets from Haywood and Roth and HC Wainwright that are 2 or 3 times higher than the stock even trades now. And credit to you and the team, Amir, and your capital markets experience for doing what you did over the past couple of years, and now having vision to look forward to what's next. I guess, if you will, could you tell us a little bit more about sort of those valuations of royalty companies and why that was an attractive idea for you? And then it's no secret that down the road you're looking to spin this out. I think the Globe was writing about it through that lens as well. And so just tell us your plans for this whole deal.
Well, I mean, first of all, again, if you look at the fact that gold-focused royalty and streaming companies have deployed or invested $30 billion into exploration, development, and mine construction. You can appreciate why this has clearly been a preferred way of deploying capital for investors who have poured significant capital into those royalty companies, who have then invested that capital into exploration, development, and mining projects. And if you have an advanced stage project or you have a royalty on a producing asset, those tend to now be trading at incredible multiples. I mean, I think a company like Franco-Nevada trades at 40 times future cash flow type multiples and almost as high as 3 times net asset valuation. These are far greater multiples in the market than where the producers would be trading at, including the big guys like Barrick and Newmont. And so clearly those market multiples are attractive. And if producing assets fetch such premium multiples, you can appreciate that development stage, exploration stage, pre-production assets are now also trading at attractive valuations and multiples. I mean, you look at even just last week, the investment that Wheaton Precious Metal made in a Colombian-based project just about 12 kilometers south of our Colombian projects. I think valued that resource stage project, Nick, at about 0.8 or 80% of that project's NPV. So bringing it back here to the way we're kind of looking at this, this truly is a situation where you're creating Gold Royalty Corp in a way to give a very distinct and additional layer of value to our shareholders. And again, we've had questions from our shareholders saying, is anything being taken away from me? And the answer is no, because Gold Royalty Corp is 100% owned by GoldMining. It's a different structure and form of holding our existing portfolio in a market, and at the time in a market where, again, those premium valuations are being given to royalty and streaming companies. And more importantly, Nick, as we go into this bull market now where GoldMining may, in fact, in the future look to sell some of its assets or portfolio projects, this way we've already created the vehicle that will retain long-term exposure to assets that we've spent a decade assembling and acquiring. We really do sort of check a number of boxes here. But what's really, really important is to be very clear here is that by no means does this change our focus. The GoldMining's focus remains our two-pronged strategy for expanding our property portfolio. We make accretive acquisitions of resource stage projects, and we advance them towards development. What Gold Royalty Corp is going to do is simply be a complementary platform to GoldMining's future acquisition and development plans. So again, no change in strategy, simply doing a bit of harvesting of 10 years of being very active acquirers. In today's hyper-competitive landscape for royalty and streaming companies, it's almost impossible to be able to create and own 14 royalties overnight the way, and I say overnight, it took longer than overnight for us to form Gold Royalty and be able to announce what we announced here. But it right away shows critical mass and diversification. And I want to bring back to your original question about multiples and valuations for royalty companies. What royalty investors want to see is critical mass, size, and diversification, and direct exposure to the underlying commodity. Our company is gold focused, and these royalties are on gold projects. Number one. Number two, 5 different countries, 14 different projects, doesn't get more diversified than that. And as royalty investors, you want to make sure you have exposure to the upside potential of those projects. The total land that these royalties that we've created cover includes almost 1,300 square kilometers, Nick, or 139,000 hectares. And so you've got incredible amount of upside exposure through these 14 royalties, but meaningful amount of resources and projects that are resource stage and have had historic economic studies and other advancements that have taken place. So that's also what allows us to do this. I've had people say, how come every other company doesn't do this? If you have a couple of projects, 2 to 3 projects, it just isn't enough critical mass. That's the hurdle you got to be able to clear. And for us, it didn't happen overnight, right? This is really the fruits of your labor over a decade that you can now create this and pass it on to GoldMining investors.
Well, like you said, it's doing a bit of harvesting, and I know something about that. You've got to make hay while the sun shines, and the sun is certainly shining on the gold sector right now. So, Amir, just a quick recap, and then we'll sign off here. Is I know you're still busy on the looking for acquisitions front because you told me as much just about a month ago in a separate interview we did. I know you've got no debt and still a significant amount of cash. Um, I have to guess you're also busy on the royalty front looking for other royalties and avenues to advance this new gold royalty corporation. And I imagine just with the global resource you have and the amount of projects you're working with, that you're also eyeing ways to advance them through various means, whether that's technical reports like you've been putting out on some of your recent acquisitions or otherwise. So congratulations on this next iteration of the life of what I've been involved with now since it was Brazil Resources, then GoldMining Inc., and now adding a royalty component. It's been a pleasure to be involved. And as I also said, I just raised the buy under price a month ago, but it seems that it's time to start doing that again. And I'll leave it right there here unless there's anything else you'd like to add.
No, that's exactly it. And look, over the long term, we do intend to explore the best and most optimum value enhancing transactions for Gold Royalty Corp. So, be it a potential spinoff or initial public offering, sale, merger, or other transactions, all of it can, I would imagine, only increase shareholder value. We'll look for the best path forward. I think we've given yourself, the market, and our existing investors a really solid platform and reason to really become interested and even give potentially greater value to what GoldMining has created here. Look, when you have, I think, skin in the game, and as you know, I'm the largest individual shareholder of the company. We've had a lot of long-term holders involved here. You're always working for the equity. You're always looking to unlock value the best way possible. At this juncture, where we're at, where the market is at, this certainly seems like an excellent kind of way to position the company for future growth. And I'm really excited about that. And look, for you, ourselves, our shareholders, it truly is like getting in on the ground level on a new royalty company with the optionality that it represents, and the fact that I would argue, and as you touched on it, with the existing business before we even announced the creation of this gold royalty company, I believe we had an undervalued situation with GoldMining, and even I think the three analysts that cover us confirmed that with the various, the three target prices that they have, and sort of how the company is viewed by them and the market. So I think we'll have some work ahead of us here, which is all very positive and in our control to advance these projects and these royalties, and look to connect with you back again soon as we have more news and updates, hopefully very soon.
Well, it's good to be busy. Appreciate the time today, Amir.
Thank you, Nick.